level one, we talk kind of business cycles and things like that. And it's going to be here, cycles. Yeah, here we go. Right. So in level one, we have this little graphic just talks about the seasonal cycle all the way out to the interest rate cycle and demographic and all that. And Brian does a great job of talking about how we're moving into a growth cycle, right? And that whole Jupiter Saturn, man, Shane called it with that. Shout out Shane, Mr. Meows. Hope you're doing well and getting ready for the winter and all that fun stuff up there. But the those cycle pivots, they are quite interesting. That's just to put it lightly. But then the one thing I like to share with the level one students when we're talking these bigger cycles, that doesn't mean there won't be these cycles within the cycle. So it's not just growth, or if things are real bearish and we're coming off this other side, just to keep in mind that there will be these dead cat bounces, and even in a bear market, you could just play 382 bounces, or and there are people that do that. So keep the cycle, the general bigger picture cycle in context, but then understand, just like the whole fractal idea, as above, so below. If we zoom in on that bigger cycle, there's going to be cycles within the cycles, and then cycles within the cycles, and then same thing. So the more you zoom in and zoom out, it's all very similar from a pattern. And again, the whole fractal maple leaf concept. So just keep that in mind when we're talking these bigger cycles. It's not that that's the only thing going on, or that's the only kind of play in town. But anyway, this Call of Rhythms is a very interesting. Some of it might not be as esoteric as some of the other interesting stuff we look at, but anyway, for their really, again, very macro, Cole's come on and talked a fair bit about 2027. These guys here, and I don't know if they necessarily use the exact same timing solutions that Cole and then some of the Astro Peeps do. But again, there's confluence through all this. If one person's looking at it through this lens, they're still looking at the same, again, humans and all that other fun stuff. So there's going to be some confluence there. But again, keeping in mind this 2027 date. So this Call of Rhythms, they call it a physio. So it's like a physical and emotional cross. So these are, think of it kind of like the breath signal, like a DI with a third moving average on it. And when they get their various crosses, it's similar to a bullish or bearish signal for us. Anyway, their bigger picture cycles are just telling us, hey, heads up, right? And the last thing that I'll mention with that cycle, just to kind of circle it up with this Benner cycle, he's giving us also heads up on that. So 2026, so it looks like from a bigger picture standpoint, 2023, going into that, not so great. And I think what we're looking at and seeing in the charts today, the fall of 2022, I don't think that we're moving into an extremely rip roaring bull. And based on this, he's saying the exact opposite, right? So maybe pricing out those put insurance isn't a terrible idea. But on the other side of that, as we know that, when we get those Macklemore prices, when things are in the dumpster, definitely low prices, discounts, etc. Build your inventory, and again, look to kind of offload it into that 2026 favorable window, which if you subscribe to the bigger picture cycles and all that, then 2027, not so hot. And again, pull back into here and so on and so forth. So again, that's that's more than a 10,000 foot view. We're talking, 2027, 28 into 2030. But I just want to kind of mention this resource, and that's KALA rhythms.org. And they have American cycles. They have a bunch of very interesting stuff on here, and they go back quite a bit. So if you're a historian buff or financial historian buff, definitely a pretty cool resource. Got a lot out of it. Oh yeah, so there is actually one other thing I wanted to talk about from a cycle standpoint. It's this book, The Fourth Turning, written the late 90s. I didn't read it until about 2 years ago. Wish I would have read it in 1998, 99. Would have been, way further in front of where I'm at now, but it is what it is. And this guy does Strauss and Howe, they wrote a book called Generations, which was like a massive, thick textbook. And this was more of a short and sweet version of that. Um, yeah, I think there's a picture of Bill Clinton with that giant Generations book. But anyway, so anyway, they have a similar thesis, right? So just getting information from different. We're talking demographics, we're talking business cycles, we're talking astro stuff and those type of cycles. Broader picture business interest rate cycles. So definitely some confluence there. So I think that just gives us the rough overall roadmap future forward, right? At least that's what I'm seeing and kind of expecting. And again, it's not doom and gloom, because even in a bear market, there's windows of opportunity. And like Brian, again, when we first showed up, the whole opportunity is now here. Just there's no right or wrong way to read that. It's your perspective and how you want to, if the wind, even if like you're on a sailboat, right? And if you have an unfavorable wind, as long as you tacked correctly, you can still get to where you need to go. Now, if you don't tack correctly, you're going to get smoked. But again, there is opportunity even in those bear markets. And again, the cycles within cycles. So I don't want to be too doom and gloom and pessimistic and all that other non-PMA crap, right?